on board then. Dipan Mehta, who's joining in on the show. Dipan, hi there. Good to have you. There's nervousness and volatility across the global markets. Every day it's a new headline that's bombarding the screen. But what's your latest take on what the ripple effect of the Credit Suisse news could mean for global banks and, of course, for back home? Is there a fear of contagion?
Good morning, and thank you for having me on your show. I think, again, we are in a classic risk of trade, and problems globally are having ripple effects or causing waves over here in our markets as well. And clearly, I think there is no impact on the domestic fundamentals. In fact, I heard your report on oil prices and how beneficial that is for our economy and corporate earnings. And yet, you have stock prices correcting because of relentless selling coming from the foreign investors. And this is a pattern which we have seen has played out several times in the past, back in 2008 and 2000, as well as 12, 13. And my assessment is that we just need to ride out these turmoil times and just stay put. Eventually, I think once stability returns in the global markets, and again, India will start to outperform, and I think it will do with a huge margin this time around. But for the time being, I think it's very difficult to say when all this will settle down and when the markets will bottom out.
Okay. So, Dipan Mehta, one has to talk in terms of sports or cricket terminology. If one has a T20 approach, what is the best way? And if someone has a test match approach, what is the best way to approach this market? Test match gives you time, T20 does not give you time.
Yeah, well, T20 also is a bit of a game of luck as well. And from a T20 perspective, then you have to go for the momentum stocks. These are great trading opportunities as well in the markets. And if you're a good trader and able to cut your stop losses, then there is the entire Adani group of companies and some of the other highly sensitive stocks which have very high alpha, go up and go down at least 7-8% in a day. And that does provide an opportunity if you were to compare it with the T20 approach. From a test match perspective, yes, I think this is a good time to start getting into some of the contrarian bets as well. And some of the existing stories also, which have done well, sectors which have done well, where prices have come down, you could look at those sectors as well. From a contrarian perspective, yes, I do understand that software companies have been beaten down. But I was quite pleased with what LTI had to say in their recent investor day, and that does inspire confidence for the stock as well as for the sector as a whole. And then we had this KPIT news as well, where they got the order from Honda, and it's supposed to be quite a major contract for them. So maybe, if you have a longer term view, 2, 3, 5 years or so, and the way the software companies are trading at, even some of the mid cap ones, the high flyers, their also valuations have come down to reasonable levels. So you could look at increasing your exposure to software companies, the ones which have been outperforming in terms of financials over the past 3-4 quarters or so. And maybe you'll get rewarded pretty well over the next 2-3 years or so.